Florida, for example, which is my favorite state to invest in tax liens with, they offer 18%. And at the auction, the interest gets bid down in 0.25% increments. So it's whoever takes that lowest interest rate on the property is the winner of the tax lien certificate, and they start accruing interest.
This episode brought to you by Suites at Madison. Meeting and conference rooms for rent by the hour, week, month, or year. Suites at Madison, where business gets done. Check them out at www.downtowntampaoffice.com. Now, on to the show.
You are listening to the Invest Florida Real Estate Show, covering topics in lending, buy and sell strategies, property management, hot markets, and tips and tools to guide you along the way on your path to real estate success. You want Florida investment real estate talk? You have come to the right place. And now, our hosts, Eric Odom and Steven Silverman.
Hello, and welcome to another episode of the Invest Florida Real Estate Show. This is your co-host, Eric Odom, along with Steven Silverman.
You say that so softly, it's like you're going to ease into something. I'm getting excited.
Well, we're easing into the end of the year, Steven.
Somehow you never ease into it. It's always like a wild, crazy
like a baseball
panic.
bat to the head. It's supposed to be the holidays, a period for relaxing. It never really is it?
I don't think we know how to relax. If you're a broker in this business, you're on a treadmill.
Yeah, and we've got a couple of little things that just popped up here, kind of unusual. Had a couple of little investment properties. I mean, normally our investment stuff, transactions would do is a $5 million strip center or a $2 million apartment complex. It had a couple of smaller deals actually that came up here recently. Both you and I each had one, right?
Well, I tell you, it's in some of these office deals, investment properties, I kind of like because people are getting a return on the investment. You can't replace those buildings at today's cost and
the price that you're paying for it.
And also there's a good chance they'll stay occupied because for people to move into newer buildings, the rent is much higher. So
what kind of deal you got there now? You've got a little deal over in Brandon. It's like an 8.8% cap or something like that.
Yeah, just a little investment property.
No. What's he asking for it?
Nothing sexy. I mean, actually, this one's pretty cheap. It's $275,000. So it's just a small little one that one of my clients is on. Just wants to do other things. You've got one too, right?
Yeah. We've got two little offices over in St. Pete. And one of them's got a national financial services firm on a 5-year lease, and another has a medical service provider on a 5-year lease. They're good little deals. I mean, my deal's 7.5 cap, and they're asking, I think, about $515, something like that for each one of the small buildings. So, these are smaller deals that somebody that's in a 1031 could easily do. It's unusual for us to have these sort of sub $1 million transactions on the investment side. They typically tend to be a little bit larger, but occasionally these things pop up, and they offer some opportunity for people that want a little smaller deal. Stephen, we love when our listeners give us reviews.
Yeah. Do you think they're tuning into the wrong program and then they just leave the review, or how does that work?
And sometimes they say our names, which way I know that they haven't left a review on the wrong podcast. But in this particular case, FL Theodore leaves us a review, and he says, "Great show with great guests. I never miss an episode. I wish these guys would put out more content, but I know everyone is busy, so I will take what I can get. Keep it up, gents, and thank you for dedicating your time to helping others." Florida Theodore, we appreciate that. And, you guys out there listening to us, as you know, we don't do this for financial purposes. I mean, obviously it helps promote our business, but we don't, like many of the firms, try to sell services for guru services or advertising. And we do that because we had people that came to us and asking consistent questions, the repetitive questions. And so this became an encyclopedia of those repetitive questions. That was the initiation of the show. And so these reviews help us tremendously because they help us bring on guests. Guests will vet us and determine whether it's worth investing their time with us or not. And then they'll come on the show if they see that there's people that are paying attention and they leave good reviews. And it keeps us near the top of the charts for our specific type of show. And so if you've not done that yet, to going to the Google iTunes Store or the Google Play Store, it would be very much appreciated for you to go there and leave us a review. Stephen, we're talking a little bit, a topic that we've not covered in quite a while here, right?
And it's important, and it's a topic that, frankly, we all seem to forget about. So,
yeah, we slept on it.
But it's still there, and it's still doing really well. So we've got something to learn today.
Yeah, no, we're excited to have a little talk about tax liens and tax deeds. It's been a while since we addressed it. Things have changed quite a bit, but I think you guys will appreciate the conversation. Stephen, anything else before we get rolling to our guest?
Nope, let's go right into it. Today we have with us Melanie Finnegan. Melanie is a certified tax lien professional with Tax Lien Wealth Solutions, where she manages its daily operations and handles its company portfolio management and portfolio consulting. She has been investing, educating, and assisting clients in becoming successful tax lien investors for over 10 years. She has educated herself in every area of the tax lien investing process, and she helps clients implement a strategy that allows them to maximize their ROI and compound their interest. Melanie, welcome to the Invest Florida show.
Thank you so much, Eric and Stephen. I'm so happy to be here.
Hey, Melanie, really appreciate the time that you're investing with us today. Why don't you talk a little bit about the certification that you have? And that was pretty rare, and you've been helping people, I guess, acquire it, correct?
Yeah. Do we find certified tax lien professionals on every block, or?
No, you don't. So thank you for asking me that, you guys, because it was such a milestone for me. It comes directly from the National Tax Lien Association, who oversees our investment and keeps it, keeps us in check. And it's an exam that you take, but you also have to have a period of time. You're vetted. You have to have an experience, and then once you get approved with your experience, it's usually minimum of 3 years. And then you have to take an exam and test out. And then, so on the West Coast, there's probably maybe, and that's where I'm in Utah, there's probably maybe 5 of us that have it. On the East Coast, maybe 10 that have it. Those aren't actual numbers, I don't know for sure, but yeah, it was one of the toughest exams I've taken, but one of the most valuable ones to my life as well. So yes, it just means I passed the test and I'm approved and vetted through the National Tax Lien Association.
It's terrific.
Well, you're approved, so we approve.
Thank you.
So Melanie, I know that a lot of listeners are going to know what tax liens are, but I think to still a significant portion of the listener audience, it would be helpful to do a little bit of an overview of what a tax lien and tax deeds are, and then how things have evolved, and kind of what, and then we can lead into what you're working on now. Does that work for you?
That does, and I'll go over Florida is where kind of our home base for investment, so that's perfect.
Terrific. So tell us about tax liens.
So let's just talk about what is the definition of a tax lien. A tax lien certificate is a certificate of claim against a property that has a lien placed upon it. So it's a result of unpaid property taxes. And then tax lien certificates are sold to investors through an auction process the following year that you're delinquent. So what does that tell us? If you don't pay your property taxes, you're gambling. You're gambling with your property. So as a property owner, pay your property taxes. There's 14 billion delinquencies every year.
How many? 14 billion?
14 billion delinquent property taxes. And
I was going to ask you to send me a list, but forget it.
Hey now. But no, so this is why the tax lien money or property taxes are so important. I'm a recipient of this. My father was chief of police, and who pays that salary and who does that? It's the taxes, property taxes. So counties have budgets that they have to meet. If they're in the black, then they are not going to obviously meet them, and they'll have bankruptcy, or they won't be able to pay salaries, and they'll have layoffs, things like that. But it goes towards our teachers, our schools, our stoplights. The money has to be paid, and the government, about in the 1800s, if you want a little history lesson, developed tax lien certificate investing, and they've tweaked it a little bit, but it's one of those, if it ain't broke, don't fix it. And that's why these are so valuable to us.
So they're delinquent. The government goes to what used to be the courthouse steps, and sold them to people for a return. Correct?
Yeah, and they still do it like that. So that's a great question. So it's more automated and things are kind of acclimating and evolving into automation, and they're grabbing it from websites and looking at online, auctions and things. But there's still, I take clients and I fly out and take clients to auctions all the time. Deed auctions and tax lien auctions. Deeds are just the exact same thing, but it's actually you get the deed to the property rather than having a lien, investing in a lien. So deeds are a little bit higher risk and higher dollar. Tax lien certificates, I think, are for everybody if they can beat the institutions out.
So just walk us through this. Somebody owes property tax on a property and he owes $10,000 in property tax and he doesn't pay. What happens next?
Yeah, the government needs their money.
Yep. So let's just break down the tax lien certificate. So a tax lien certificate was just that lien, right? It's for not paying the taxes. So every time your property taxes come due and you're not paying and you're delinquent, the municipality or the county will issue a tax lien certificate and put it up for auction for any investors in the area or outside of the area. And they start bidding via interest or dollar. So if you don't pay your taxes, you're in trouble. Your property will immediately be at risk, or you'll be paying high interest penalties.
Okay, so
the county is out zero money.
So the county now they putting out the certificate for $10,000. Are people buying it at face value? Are they buying it at a discount? How does that work? What kind of a return are they looking for? So
it's always going to be an interest rate. So they have a base rate that will start. So Florida, for example, which is my favorite state to invest in tax liens with, it's kind of my baby. They offer 18%. And at the auction, they will do, the bidding is the interest gets bid down in 0.25% increments. So it's whoever takes that lowest interest rate on the property is the winner of the tax lien certificate, and they start accruing interest.
And so the person that's paying the interest is the property holder. So they had like using Stephen's example, they owed $10,000. Some investor steps in and pays the $10,000 because the municipality needs that money to be able to run the government. And the landowner who did not pay the taxes now has to pay the $10,000 plus whatever interest is bid on.
Yeah, so I accrue it is 1.5% per month or 18% a year.
Okay.
And there's a difference. So there's primary market and then there's secondary market. And my business, I'm the owner and founder of Tax Lien Wealth Solutions. We do secondary market because, and I'm going to go into how this is an industry dominated by institutions. So what I mean by that is Deutsche Bank, hedge funds, Bank of America. They go in and they just scoop all these up, and it's almost impossible to compete with them on the primary market. They've got boots on the ground just bidding like crazy, and they've monopolized the industry. And unfortunately, Florida grandfathered all their EINs in, and so a single person will have 20 to 100 EINs per, bidder, and they're able to just keep bidding and beat everybody out like a regular person like myself or yourself. We can't just come in with 5,000.
EIN, let's make sure we define that for listeners. EIN is?
Oh, excuse me. Yes. Employee identification number. So it's a taxpayer ID. It's either like an LLC or it's a Social Security.
Okay.
And do they look at these properties first, or do they just have some kind of programs where they just blanket bidding and scooping up properties?
So, and I'm going to kind of say this to you. I'm in Utah, right? And I do about $1 million a month in tax liens in Florida. And I don't look at a single property. I run algorithm based off of numbers.
So on the primary, you've got what's happened is that because it started to go online into the cloud, that it became much easier and less costly for these institutions to get involved. And so they're able to deploy massive amounts of capital in short periods of time, buying into these tax liens. And that market has become saturated. It's a tough market for folks like you to be involved, or me and Stephen to get involved and buy those deals. And it's hard to compete with them. So you've moved into a different type of the market. Why don't you talk a little bit about that?
Yeah, so secondary market. So you're absolutely right. Really quick, and I know your listeners have gotten, probably because they're real estate, they're looking at this. They've looked at this facet of real estate, and they've probably either become frustrated because of this domination by the institutions, or it's just so many moving parts they don't want to get involved. So what we did is I created a I purchase from the hedge funds and the institutions. So they season them for a little bit, and then they sell them, at a small discount to my company as I buy in bulk. And I just work with my brokers, and we purchase from the secondary market. We're outside of the grace period or redemption period, which is the first 2 years in Florida, where the investor cannot make any moves on the property, but 2 years in day one, we can initialize foreclosure. So I buy outside of that 2-year grace period, and we initialize foreclosure. And just to get our redemptions, start getting redeemed, getting our interest compounding and working for us and things like that. So I buy from the institutions and vet with my own processes and strategies. That's kind of what my strongest point is vetting and looking at these liens and running my algorithm and utilizing my own strategies. So secondary market is the only way I could get the regular guys like, myself and anybody else like us, regular people, they get involved. They get to do tax lien investing, and they get to learn it.
So at that point, let's say Deutsche Bank has bought a block from Hillsborough County, or let's say Metro-Dade County, and they own, whatever it is, 10 million certs, and that's on, 10,000 different properties. How do you know what Deutsche Bank is willing to sell or not? Are they being brokered? Or some broker in the middle of that, or how do you know? Okay.
Yep, I work with brokers that I have access to because of my certification.
Gotcha.
So as the primary cert holders, just on average, and I realize it's all over the show, what kind of a return is Deutsche Bank looking for on those notes? On those certs? They're looking
at the interest rate, and they usually give about a 5% margin, just depending, because they've been seasoning for them for a long time. So whatever the stated interest rate is on the certificate, they've been seasoning that, let's say, at least a minimum of 2 years. So if it's 18%, they've been getting 18% for 2 years, and then they sell it to me for current market value. And then they discount me about 5% off the current market value of the certificate. And then I sell it at market value.
Gotcha. So you're taking the spread of a 5% difference on that.
Yeah. But I don't make money on tax lien certificates for my clients. I do education, and I have my own certification that the clients do. And then I do, advanced education, and I also do management. So I also do cash investors, where they just hand over their cash to us, and we manage their funds for about 18 months. And if they want to continue, and we're developing a fund as well. Oh,
gotcha. Okay. So would you make money? So you move to foreclosure. You're getting it 2 years in 1 day, let's say.
Basically.
Yeah. And so you buy it at that point, and you can start to initiate foreclosure, which would go in the next tax deed sale, which whatever that is, June or whatever they start selling the tax deed.
The tax deed goes, and I don't mean to interrupt you. So it goes, we initialize foreclosure, and it's all online. It's super simple.
Yep.
Florida is typically all online. The U.S. is not all online.
Is it expensive?
No, it's so easy, and it's like, maybe so what happens is you have to pay off the additional tax lien holders, because in Florida there could be a total of 7 separate years because of the statute of limitations. So you have to be prepared for that process. So I may buy them into the deal, but then they're going to roll up everything and become the sole tax lien investor that files foreclosure. He redeems everybody, and then he's making 18% on that total investment. No matter what the certificate says, that's an incentive that Florida does. They're making 18% on their total investment, their fees, anything else that's in there. And then now the property is threatened, and either we shake the money loose, and the property owner goes, I'm going to pay it. He's gambled a little bit trying to play the tax lien game, or property owner does not pay his taxes, and it goes up that does not automatically go to the tax lien investor. Florida has a little bit more protection to the investors because they put it up for deed auction, and the minimum bid starts at whatever the investor has into the total principal plus the interest that's accrued. And those tax deed auctions are scheduled every month, but typically the counties are out about 6 months, 6 to 10 months so they're accruing interest the whole time. And then the local real estate investors have to attend the auction, and they'll pick it up, and you'll get redeemed that way, or you end up winning the deed to the property. So 99.9% of tax lien certificates redeem nationally. There's 0.1% of 14 billion that doesn't. So you still need to be careful.
Are you participating in any tax deeds? Are you purchasing any tax deeds?
I do deeds. I love the tax deeds. I love acquiring tax deed. I have 130 properties. The company has 130 properties right now that we've acquired. And clients are afraid of that, but that's really where the money is. If you're invested right and you're acquiring deeds, that's where the money is, if you're getting a deed via tax lien certificate and you've done it right, or you have somebody mentoring you to do it right, you're going to get a good property. The clients that get property from me, it's really, I'll tell them like, let's prepare you for it, but I don't think you're going to get it. And all of a sudden one will get it and they'll make $100,000 off of 50,000. Just because they got a property and turned around and sold it.
Let me understand this. So you're saying that 99% of deeds redeem. That means that the person who owns a property won't lose a property. They'll just pay the interest and you get whatever the interest is. What you're looking for is that 1% where they don't redeem and then you can get the property. Am I understanding right?
No, I'm actually not going after property, but if I have a buying strategy that is, I'm conservative. So me personally, I've actually been doing this for almost 11 years now. And me personally, I've always been conservative. So I always want the interest gain, but I protect I look at the certificate as a story and my algorithm tells me whether it's going to perform for them or not. And if we do get acquisition, then the client's just going to eat it up and I'll have a friend for life,
So most of the tax deed action has also become institutionalized. How is that working out for you?
Yeah, but it's local real estate investors too. It's not as monopolized like the initial auction to get the taxes paid.
Okay. I mean, I live in a tax deed and have bought a handful of tax deeds as well. And it's obviously since it went online here locally, it's become more challenging because you get folks from Germany and France and they don't even know what they're buying, buying these properties. And you're like, these people are morons. And they're buying an easement that might be worth $150 and they're paying $7,000 for it. And you're like, what are they doing? What are you seeing? And are there counties and areas that you prefer better than others?
Oh, yeah.
Yeah.
Yep. Duval County is up and coming, but it's scary because Florida is a super lien state, and Duval County, what that vernacular means is that so tax lien certificate investing, you become the boss of the investment.
Sure.
You're the sole, you're the most important one. So you usurp everything but IRS government liens. Right. But in Florida, it's because it's a super lien state. Duval County, I stay away from, even though it's up and coming and there's areas there that perform really well. They attach municipality liens on there that stay with the property for life. Ouch. And it can be up to $25,000. And a resale on that is just as scary. Even if the buyer is not going to end up paying it, it just means that the HOA can stay with it. It means so I have to look for that stuff as I'm vetting. Yeah,
and no one's got time for that. When you're looking at literally dozens of properties, no one's got time to do lien searches on every one of these. You have to take some. I mean, that's the whole point. It seems like Duval's sort of circumventing the point of the process is, no one wants stinkers. Nobody wants to pay for these things unless you're going to end up with clean title. No one wants to loan anybody money unless they're going to come clean from an investment standpoint. And if they're sticking their fat fingers in there, they're defeating the purpose. Investors are going to shy away from that because if they have a chance of losing money, why would you loan this money that you might never get back, or you might get attacked lien to?
Yeah. Well, and because it stays attached to the property, like somebody like me, I would buy property in Duval all day because it stays attached to the property and it basically stays there for 4 years. But I would buy that all day because I know that I'm not going to be, I've put it in my entity. I'm not going to get sued if they can try all they want. I know how to protect myself. Somebody that's just that's the benefit of utilizing tax lien wealth solutions is that we actually know Florida. I will see a county and I'll see a neighborhood or an owner on there, and I know the owner and the developer's in bankruptcy, and I'm like, get out of here. I don't even want you in my inventory, because I know he has HOAs in there and they're $30,000 liens and people are suing, and but that's part of that. How are you supposed to know that? How was I supposed to know that 10 years ago? I learned that by mistake.
Yeah. And getting burnt, getting your fingers burned.
I really did. I mean, the first 3 years of my career were like my master's degree for real. And I'm still learning.
So this is not something that's really easy in today's world for someone just to go up and do on their own now. It used to be, but everything's changed, I guess, since everything's gone online.
Yeah, no, Stephen, you're right. And it's like such a beautiful investment. That's where my passion is like, it's just such a beautiful investment. The government knows how to get their money back, and they have to entice investors. And it really shouldn't be monopolized by these institutions, but they buy everything up and pay the bills. So they were grandfathered in, and they're allowed to utilize their system that they have and monopolize our industry. And so that's why they created the secondary market, because these banking institutions don't have a foreclosure department. They don't have a real estate department. They are interest gaining only.
Yeah, we know how this works. I mean, this is, it's all, the politics of this is, the guys with the big dollars will come in and say, hey, this system would be really great if you did X and Y. And of course, what they're doing is greasing the skids for them. And it's usually at the expense of the little guy who could earn a decent living off of doing this stuff. And we see this happen throughout everything from medical office space to tax to lien investing. Doesn't really matter. Whoever has the dollars to influence the government, that's who usually gets pushed that direction.
Let me share something really fast with you on that, Eric. So I just got back for the National Tax Lien Association's Fall Symposium. I was a speaker there, and I also was, I was learning with I was going to the breakout sessions, things like that. We had one tax collector in, and I'm not going to say where they're from, or it wasn't in Florida, but she was advising on how to get yourself more involved in this, and she was saying, and this is the most unethical thing, and I called her out on it a little bit because I couldn't stand that she was telling us to butter up your tax collector. So she'll call her favorite investors and say, hey, this property is going up for auction tomorrow. Come in with your money, and she'll make sure that and you don't do like that's such a no-no, but politics are politics, right? That's for some reason politics usurp everything and the deep pockets win. So how is a regular investor going to ever compete with that? How? Or somebody brand new to the industry. It's so frustrating for me because it's like you can't compete with it.
So contribute to her campaign when she runs the next time, and make sure that she knows who you are, and you get the first look at the deals that she knows are coming through. That's terrific.
Yeah, that's like how unethical is that? And I just kept looking around the room, and I was like, my eyes were darting, and I was going, this is unethical. This is unethical. And I finally had to raise my hand and say, I don't think what you're saying is okay. And I had to call her out, and it was really intimidating. But especially in our boys' world, I'm like one of 5 women in this whole community that we have, 1,000 people in there. And I'm trying to teach the right thing and having a moral compass, because I want people to be doing this the right way so everyone can succeed and have the chance. Is it ever going to change? No. I mean, it's been around since the 1800s. The government needs the money to meet our budgets. I mean, Again, my dad was chief of police. I'm a recipient of this.
So what happens if you don't foreclose and like you've spent the money for the tax deed? Then you just sit and wait until the property one day sells, and you get paid at that point. Is that how it works?
No, not at all. So in Florida, every state has a statute of limitations, so they have an expiration. So if you're an investor, which we don't let our investors do in our clientele, if you're an investor that is an idle investor and you're just waiting to be redeemed, it happens often. It happens often because other investors redeem you by filing foreclosure. Deed auction redeems you. Property owner redeems you. There's 4 facets of redemption in Florida. But if you wait all the way up until 7 years and day one, you've just paid somebody else's property taxes. They have no liability anymore, and it's wiped off. And all that interest that you were sitting on is gone. So you cannot. Never stay idle. I always tell everybody, especially in Florida, never stay idle on a tax lien certificate after the 2-year mark. Just get it moving and progressing and get your interest working for you.
Tell us, now that you're talking about, perhaps some sinkholes, potholes that you might step in, or you're talking a little bit about the expiration, and these have sinking clauses in them. What are some of the other things that folks need to be aware of from just a 30,000 foot level? I mean, you already talked about Duval being an issue, and you talked about the IRS, the federal government liens. Is there anything else that people need to be concerned about? Some big higher 30,000 foot issues?
Absolutely. So the biggest component. So I'm a data analyst, right? I run data. I didn't know I was a numbers person, but the tax lien certificate and the strategies that I utilize and have created, the tax lien certificate tells you a story. There's so many nonverbal communications as you put it out in the Excel sheet and you watch it, but you run numbers, and I know how to do the due diligence. Due diligence is number one. So you can maybe look at a certificate and it's $50. If you don't know what the roll-ups are, which are the other additional tax liens, and you're in over your head, you could get an easement property that you just paid $7,000 for because you had to pay all those additional taxes off, and it only assesses for $1,000.
Yeah.
Like that would be upside down. Are you kidding me? The property owner's probably not going to pay unless he really loves it and has an attachment to it and a sentiment to it. That's when those people pay. And it never gets sold at deed auction because people go, it's a red flag. It's upside down. Mm. And I use assessed value as that's my number one data that I collect is the assessed value. And then that's what I use as my exit strategy. Now I'm always focusing on getting redeemed. That's also going to communicate to me the redemption.
Mm-hmm. And we're just getting into the November filing period in the state of Florida. So that's probably when y'all start getting in gear, I would imagine.
I'm in gear all the time.
Okay.
So I'm in gear all the time just by being secondary market. So we're always moving and shaking. But the only two months that Florida does not do deed auction is November and December. They don't want to kick people out during the holidays and sure. cause financial, distress and strain. So that humanizes them a little bit. But the other 10 months, there's monthly auctions all over Florida that are going up for deed auction. That's only if the property owner does not redeem and pay his taxes and plus the interest.
So you mentioned that you starting a fund. What kind of return do you anticipate that the fund would earn for an investor?
So it's going to be based off of, we're going to have two parallel ones. And this is, we're still doing the second one and putting it in order, kind of like it's going to be more of a VIP one. I've had clients with us for 10 years that just have proven themselves to me. Not only have I, that I've been working with for 10 years, and they'll be part of that fund as well as our first fund, which is going to be 7, 8, or 10%. And it is the interest rate is based off of the duration that they're in the fund, 1, 2, and 3 years.
Mm-hmm. And if people are buying deals individually through you, what can they expect to earn? Like just an individual tax lien?
So let me tell you what my 10-year average is. My 10-year average is 23.7%.
Okay.
And that's because I'm compounding, I'm working money constantly. I've had the same people just constantly cycling their money through and waterfalling it. If you're just a regular person, you do need to go through my certification if I'm not managing and you want to manage your own portfolio and have access to my inventory. I created something that gave the client an accountability, and I have tools and resources that allow them to do and progress their investment along inside of my portal. So they have to get that certification, and it's $9.95, that one-time certification, $9.95, and then $99 a year after that. But that gives them access to our inventory plus all the due diligence tools, et cetera. And they get a concierge. So they get a portfolio manager and get handheld through the process. And that average is about 14 to 16%. And I'm being conservative on that number, but I feel comfortable there because there's a ramp up period in the beginning. Sure. If you've been investing over 2 years with me, you'll be, 18.2, 19.7. Just depending on how quickly we get that interest back in there working for you, because tax lien investing can compound.
Right.
And typically, do people use these in their IRA accounts, or do they do it just regular investing?
Yes, thank you. Yeah, that's the bread and butter. That's the reason why I started my business. It's people have been working for 40 years through, and putting their money into a 401k or an IRA, and they're retiring, and they're able to actually get a self-directed IRA and have checkbook control, and they can invest in alternative asset classes. And I am an approved asset class Well, real estate is all approved as a self-directed. You can do it as an alternative investment. So a lot of people, it's really wonderful to be working for somebody that's just, it's fun to make the rich more money, right?
Sure.
It's fun. That's great. But what's really cool is walking these people through the processes of making them more than 4 to 6% that their 401k has been yielding, and I'm making them 14 to 18%. And it's really cool because they have all the control over it. We do an end of year valuation for their custodian. It's self-directed IRA is the way to do it. If you're going to jump in with both feet, I recommend, if you don't have a self-directed IRA, to create an entity that's dedicated to tax lien investing, because it becomes a business very easily.
Awesome. Melanie, do you ever come to Florida, or is all this done remotely?
I go to Florida all the time. I'm always in Siesta Key. So my son and I have a 20-year-old son now. He's at the University of Utah, so he doesn't hang out with me as much. But we have a place in Siesta Key, and we go visit there all the time because I like to go mingle. I like to make sure I look at my own properties that I have in Sarasota, and things like that. And I like to just be out there and be in the thick of things. But I hardly ever attend any of the auctions in Florida unless a client has me fly out for them.
Got it.
So, Melody, if people want to reach you, how can they get hold of you?
Okay, first things first, we're running a monthly contest. So what the 3 prizes are is, one of them is a $50 Amazon gift card. The other one is it's going to get one-on-one mentorship or classroom mentorship with us. It's a $2,500 value. Or the learning portal certification is the third one, and that is a $995 value. So go in there first thing at taxlienwealthsolutions.com. and fill out that contest thing. We do it every month. We put a video up on our website and say who the winners are as we do the drawing. And then we also we have 20,000 followers on Facebook. We are on Instagram, but I'm not good at it. LinkedIn, LinkedIn, I'm just okay. I'm not really, I try to get somebody else to do that for me. I just don't have, I wish I had 26 hours every day. Don't you guys?
Yeah.
Or just go to our website. You can just submit an inquiry right there. And download our tax lien guide. So we have a tax lien guide that's in there. It's at the top of the page, and that will tell you who we are. It tells you what we do on the secondary market. It's actually one of my favorite documents that we have because it's really thorough, but really easy to read vernacular as well.
And your website is taxlienwealthsolutions.com?
Yes.
Terrific. Melanie, this has been very enlightening. Really appreciate your time.
I appreciate your time, you guys. I really do. This has been fun. Thank you.
For me, it's been very taxing, but I enjoyed it.
Oh, clever.
Please don't encourage him, Melanie. Well, all right, guys. We appreciate it.
Okay, thank you.
And that was Talking Tax Liens with Melanie Finnegan. Stephen, it's been a while since we've had the opportunity to talk about tax liens and tax deeds. What were your takeaway from the show?
Well, it's been a while, but truthfully, it just doesn't come up that much anymore. Everybody used to be running around and going to the steps of the courthouse and doing it, but the industry changed. And so a lot of people just aren't that active anymore. But what was interesting, we learned today, is that it's still really very active, but the opportunities are now in a secondary market.
I'll be the first to admit that I'm guilty of that, Stephen. I've bought some tax deed properties. I did it at the courthouse steps. I got became very disillusioned when it went online because the silliness that was going on and the overbidding and whatnot. But the tax lien situation, also when it went online, the large guys scoffed it up, and I just stopped paying attention to it. It was something that every week I would look at and sometimes would go down and bid. Most of the time it was redeemed, but occasionally I'd get fortunate enough to buy something. But Melanie has opened my eyes. She's doing it in the secondary market. She's basically opening a pathway for me that I didn't know existed, and I'm interested in following up with her and seeing if we can't she and I can work together on some things. So I'm kind of excited about that.
She said her investors are out there earning 14%. That's significant.
Yeah. Yeah, I mean, it's great for the IRA. So I'm going to, those types of interest bearing things are terrific. You don't have the UBTI issues that you have with managing properties inside of your IRA. And so these types of interest bearing types of deals are perfect for an IRA. Stephen, Melanie was a great guest. How about other great guests? Where can folks go to find that?
They're all in one place, and it's www.investfloridashow.com. That's our website, but you can also listen to all the podcasts just by going onto and downloading the apps onto your mobile device. Listen while you're driving or in the gym.
You can do that through the iTunes Store or through the Google Play Store. And we always appreciate when you do that. We get little messages that you guys have signed up. We love to have our listeners listen to us on the app. Stephen, as always, we appreciate the time that our guests, our listeners, spend with us each and every episode. And until next time, hasta la vista.
You've just listened to the Invest Florida podcast with Eric Odom and Stephen Silverman. Join us every week for actionable real estate investment ideas, and of course, visit our website at www.investfloridashow.com for more shows and tips on how to earn a cash flow in the real estate market in Florida. While hosts and producers of the Invest Florida Show have no reason to doubt the validity of comments of our guests, we do not warranty their accuracy. Please check with your legal, financial, and tax advisors before entering into any investment. Returns will vary from person to person and deal to deal based on unique circumstances. All information expressed in this show is for educational purposes only. Opinions of the guests are not necessarily shared by the hosts and producers of the Invest Florida Show.